Curious about how Rivian performed in the last quarter? Or maybe wondering about the stock price predictions from analysts and how it looks from the perspective of an amateur investor? Or you want to know how I play the situation? Hi guys, welcome back. This is the Smart Invest. Let's quickly clarify that this video does not provide financial advice. It's just the opinion of an amateur investor and the presentation of facts for educational purposes. To begin with, let's clarify what Rivian does, so no one mistakenly thinks we're talking about a detergent manufacturing company. Rivian is an electric vehicle manufacturer producing electric trucks and recreational vehicles. Among the vehicles they manufacture are the R1T electric truck and the RMS SUV. When designing Rivian vehicles, performance and off-road capabilities are crucial considerations. Except for their van. Not sure they're running around in the desert after 3:30, not even before that for that matter. At first glance, it's worth noting that Rivian, with a market capitalization of $15 billion, managed to generate over $5 billion in losses in the last 12 months. Interestingly, the company's total revenue during this period was $3.8 billion. This might seem strong, but let's not rush to judgment. Instead, let's dive into the details. Let's take a quick look at analyst expectations. It seems these analysts aren't too bothered by those billions in losses. Some of them have set a high bar with a target price of $44 per share for the next 12 months. However, the general consensus seems to be around $27, with even the most pessimistic scenarios not going below $15 per share. But what about the projected prices for 2025? Well, they are quite bold, with some analysts offering compelling justifications. The Deutsche Bank analyst sees a potential stock price of $130 by 2025. Analysts are quite positive on the company, as we have come to expect from them. Now, what does the recent report reveal? Rivian's latest shareholder letter indicates significant achievements in the last quarter. The company's production capacity and supply chain outlook improved, allowing them to increase the production forecast to 54,000 units for 2023. Alongside production growth, they made progress in cost management. In Q3, they manufactured 16,300 vehicles and delivered 15,500, showing about a 17% increase compared to the previous quarter. Rivian also announced that other companies can purchase their custom-designed commercial vans, providing an opportunity for fleet electrification and reducing CO2 emissions. The company is focusing on expanding its service network to keep up with the growing number of Rivian vehicles. How do the numbers look from the perspective of an amateur investor? Revenue increased by nearly 20% compared to the previous quarter. However, growing revenues don't seem to have a favorable impact on operating income. Currently, for every car sold, Rivian is losing about as much money as they sell the car for. In simple terms, if they sell a car for $100,000, it currently costs them around $200,000 to produce and deliver it. So the more cars they sell without increasing their profit margins, the more money they burn. While profit margins seem to be improving trend-wise, the latest quarter shows a stall in this growth. It's important to note that while Rivian is struggling to break even, Tesla is aggressively reducing its car prices, putting Rivian and other competitors in a worse position. This situation seems like an endless game to me at this stage, as Rivian needs to manufacture cars so cost-effectively that they achieve higher profit margins than Tesla. What do you think about this situation? Share your opinions. It's visible that shareholders' equity is continuously decreasing, and this quarter they managed to incur larger losses than usual. Meanwhile, they are gradually increasing their debt. But there is something else that is on the rise. Exactly, you got it. The number of shares. Although only 10 million shares were issued in the last quarter, we can see that since the end of 2021, the number of shares has nearly 10x, which means huge inflation in shares. But what about valuation metrics? The price-to-sales ratio doesn't look too bad compared to its own history. It stands at a modest 4, a historical low. If we were to compare it to Ford, it might seem high. But compared to Tesla, it doesn't look excessive. The price-to-book value is not excessively high either. This could be a reassuring metric, suggesting that the stock shouldn't drop more than 30% from its current value. However, there's something else to consider. The book value per share shows a consistently decreasing trend, which, when factored into the price-to-book ratio, could lead to further declines. In my view, the fate of Rivian depends on the patience of its shareholders. So you were curious about how and when Rivian will reach 7x? As it stands now, some irrational mania would need to develop around Rivian for it to achieve 7x in the near future. Personally, I prefer to play Rivian on the short way in situations where it rises significantly in the short term. If you liked the video, found it informative, and would like to help me on my journey toward 1,000 subscribers, please press the like button and subscribe. Take care, guys, and see you on the next episode. Try not to lose all your money in the stock market until the next video.